If your mortgage deal is ending soon, stop whatever you are doing and watch this video till the end. Because right now in the UK, mortgage rates are doing something that nobody predicted 6 months ago. And if you make the wrong decision in the next few weeks, you could end up paying thousands of pounds more every single year. I am not here to scare you. I am here to give you the honest truth that your bank will never tell you. So the question everyone is asking right now is, should you fix your mortgage rate now, or should you wait and hope rates come down? By the end of this video, you will know exactly what to do based on your situation. So stay with me. Welcome back to the Finance Vault, the channel where we break down complicated money topics into simple, honest advice for everyday people in the UK. If you are new here, make sure you hit that subscribe button because we talk about real UK finance, mortgages, ISAs, savings, tax, everything that actually affects your wallet. Now let's get into it. Let me give you the big picture first so you understand why this topic is so urgent right now in May 2026. The Bank of England has held interest rates at 3.75% for the third time in a row. That sounds like good news, right? Rates are not going up. But here's the problem. Mortgage rates on the market have actually been climbing. The average 5-year fixed rate has jumped from around 3.75% just 2 months ago to now sitting above 4.6%. That is almost a full percentage point difference in just 8 weeks. And why did this happen? Global events, rising oil prices, uncertainty in the Middle East, and economic pressure have all pushed lenders to increase their rates even while the Bank of England held firm. Now here is the number that should really get your attention. Around 1.8 million fixed-rate mortgage deals in the UK are expiring this year. That means 1.8 million households just like yours need to make this exact decision. Fix now or wait. If you are one of them, this video is specifically for you. Let me tell you what happens if you just do nothing and let your current deal expire without taking action. When your fixed-rate deal ends, your lender automatically moves you onto something called the Standard Variable Rate, or SVR. And the SVR right now is sitting above 7.25% for most major lenders. Let me put that into actual pounds for you. If you have a mortgage of £200,000 over 25 years, the difference between a 4.6% fixed rate and a 7.25% SVR is roughly £300 to £350 extra every single month. That is £4,000 a year, just because you did not take action. And people fall into this trap every single day. They think, oh, I will sort it out next month, and then they forget. And suddenly they are on the SVR paying hundreds of pounds more than they need to. So doing nothing is not a neutral decision. Doing nothing is actually the most expensive decision you can make. So let us talk about why fixing your rate right now could be the smart move. First, certainty. When you fix your mortgage, you know exactly what you are paying every single month for the next 2 or 5 years. In a world where inflation is still sitting above 3% and global events are unpredictable, that certainty has real value. You can budget, you can plan, you have peace of mind. Second, you can lock in a rate up to 6 months before your current deal ends. So even if your fix does not expire until October or November this year, you can go and secure a rate today. And here is the brilliant part. If rates fall between now and your completion date, you can go back and ask your broker to switch you to the lower rate. You are not trapped. Third, the longer you wait, the more uncertain things get. Nobody knows what is going to happen with oil prices, global conflicts, or inflation data in the next few months. Mortgage lenders have already been pulling their best deals from the market. The deals available today might not be available in 3 months. So fixing now gives you certainty, flexibility, and protection against rates going even higher. Now, let me be balanced here and give you the honest argument for waiting. If inflation continues to fall towards the Bank of England's 2% target and the economy slows down, the bank could cut rates further this year. Some economists are predicting 1 or even 2 more cuts before the end of 2026. If that happens, mortgage rates could come down. So if you fix today at 4.6% and then in 6 months, rates drop to 3.8%, you might feel like you locked in too early. The argument for waiting works best if your current deal still has several months left on it. if you are financially comfortable on your current payments, and if you genuinely believe rates are about to fall significantly. But here is my honest take. Trying to perfectly time the mortgage market is like trying to time the stock market. Almost nobody gets it exactly right, and the cost of getting it wrong on a mortgage is massive. Most financial experts right now are saying do not gamble with your home. Certainty beats speculation. Okay, so let us say you have decided to fix. Now the next question is, 2-year fix or 5-year fix? Here is how to think about it simply. A 2-year fix gives you a shorter commitment. If rates fall over the next 2 years, you will be able to remortgage sooner and benefit from lower rates. But right now, 2-year fixed rates are actually higher than 5-year fixed rates, which is unusual. The average 2-year fix is around 5.78%, while the 5-year fix is around 5.68%. A 5-year fix gives you longer certainty at a slightly lower rate. If you value stability and you plan to stay in your home, this is often the sensible choice. You will not need to think about your mortgage again until 2031. So which one should you choose? Ask yourself this honest question. Do I think rates will be significantly lower in 2 years than they are today? If yes, consider a 2-year fix. If you are not sure, or if the monthly saving from a lower rate matters to you right now, the 5-year fix gives you both savings and stability. There is no universally right answer. It depends on your life, your finances, and your risk appetite, right? So let me give you a simple action plan for this week. Step 1. Find out exactly when your current mortgage deal ends. Check your paperwork or log into your lender's app. Write that date down today. Step 2. Speak to a mortgage broker. Not your bank. A broker. Your bank will only offer you their own products. A broker has access to deals from over 100 lenders and will find you the best rate for your specific situation. Many good brokers in the UK are completely fee-free because they earn commission from the lender. Step 3. Lock in a rate now even if your deal does not end for months. You can typically secure a new rate up to 6 months in advance. Lock it in today, and if rates drop before your completion, your broker can reapply at the lower rate at no extra cost. Step 4. Do not panic, but do not delay either. You do not need to make a decision in the next 24 hours, but you absolutely should not leave this sitting on your to-do list for another month. Your home is probably the biggest financial commitment of your life. Give it the attention it deserves. So, to summarize, fixing your mortgage rate now makes sense for most people in the current climate. Rates are uncertain, the best deals are being pulled from the market, and sitting on your lender's SVR is one of the most expensive mistakes you can make. Do not wait for the perfect moment. The perfect moment is the one where you take informed action. If this video helped you, please give it a thumbs up. It genuinely helps this channel reach more people who need this advice. Subscribe if you are new and drop a comment below. Are you fixing now or waiting? I would love to know where you stand. See you in the next one.